Hello, everybody. So we've got Mark here today from Boom Community Bank, who are a not-for-profit cooperative who provide affordable loans, some savings, and current accounts for local people. Anyway, I'll pass over to Mark and let him tell you all about what Boom do.
My background is accountancy. So forgive me if this I can't share at the moment, Sarah.
Oh, sorry, it's my fault, isn't it? Participants.
So I could, as my chairman always says to me, we could talk about this for hours, and I'm keen that I don't delay you too long. But so it's going to be a whistle-stop tour of Boom Community Bank, and there will be elements of this that will be of no interest to you, but hopefully there's a few bits and pieces that are takeaways. I know Sarah said to me that you're seeing people that are being plagued by loan sharks, etc. So we're able to be a substitute for that. I'm going to acknowledge at the outset there is going to be a client group that we can't help. But as we go through the slides, I hope you'll understand that the group that we do help, we are fairly unique as a community bank, at least in the south of England, with our client profile. So I'm going to have a go at trying to share this presentation. And as I say, I'll be as quick as I can. Right. Can we all see that? Yeah, lovely. Okay, so my background is I'm an accountant. I worked for Guildford Borough Council for 30 years. And as part of that, I got roped in by David Wright, our chair, when our general manager left. So about 12 months ago, I took over as CEO, in addition to being on the board of directors as treasurer. We've recently moved from Montague Street. We're now in Liverpool Gardens, which sort of backs onto the council offices and is a much better location, more centrally located, and obviously ties in with some of the services. And we actually have got carer support next door to us, who are our neighbours. Apologies if some of this is teaching you how to suck eggs, but as David says to me, credit unions the best kept secret. I don't know whether that is the case or not. But basically, we're a member-based organisation, a cooperative. As such, all our members have a say on how the credit union is run, and they receive a share of any profit that we make in the form of a dividend. And that will apply both to people who join us just as savers and also those that are borrowing from us as well. So we offer a range of fairly straightforward savings products with fair, manageable loans to our members. Now, the great problem that we have is many of the people that we talk to look at our loan rates and they compare it with their own personal circumstances, which in certain instances, the rates are they diverge from personally what people can get. So our maximum interest rate for our products is 42% APR. Now that might make some people's eyes water, but the marketplace that our membership will be competing in will be in multiple hundreds, if not more, APR. Our loans go down to as low as currently 13%, and we're introducing very shortly a new range down at 9%. So in order to join Boom, you need to work or live in what they call our common bond. And our common bond covers Surrey, West Sussex, Kingston, and then Aldershot and Farnborough part in North Hampshire. And 2 weeks ago, we took over Berkshire Credit Union, which introduces Reading, Newbury, and Windsor if the Queen is running short of some money. So the credit union's customers are its members. So why would you want to join? Well, you can save ethically because the money that you save, it's a very simple business model. we collect savers' money. We then distribute that in the form of loans to in the same communities of which where the savings have come from. So it's kind of I hesitate to use the word virtuous circle, but it's that kind of concept. So we promote responsible lending, and one of our criteria is that we do not allow people to lend or borrow from us more money than they can afford to repay, and that is at the heart of everything that we do. Affordability. We have a different approach. We don't have an algorithmic approach where the computer says no. We look at every individual's personal circumstances, and if we can free up any disposable income as a result of a debt consolidation product or some other arrangement, then we are very happy to do that. So as part of that exercise, we're obviously promoting good money management, and as an element of your loan, wrapped up in that loan repayment that the member makes either each week, each fortnight, or each month, an element goes into their savings as well, which over the course of time builds up and runs alongside the loan that they've had. So, and this is it. So save as you borrow. And one of the things about this, and we could be talking about just a few pounds, and in many instances it's £1-2 a month or a week. But I think research shows, and I'd hope you'd all agree, that once people get into the habit of saving, it really is reinforced and continues. And I hear I absolutely get what everyone's saying about the situation and the fact that money is incredibly tight or non-existent for many people. So is your money safe with us? Well, yes, it is. So we are regulated by the FCA and the Bank of England, and we can take savings up to 85,000. Now, we have a number of corporate members that invest their reserves with us. So, for example, we've got some nuns in Woking who have put all of their savings with us. We've got some churches in New Malden. So we've got the Labour Party in Guildford. We've got a number of corporate members that are really engaged with us, which is absolutely brilliant. So what have we got? Well, we've got a loan book of about £5 million. We've got member shares, of which all of those aforementioned corporate members will form part of, in addition to those that are just saving with us and those that are saving and borrowing. We've got 11,500 members, and we've got nearly £450,000 worth of junior savers, which is great actually, because we offer a 2% interest rate on junior savers, which is designed to embed the idea that, you know, start young with the savings thought. Our demographic, as I said earlier, very interesting. I say this in this forum, that our neighbouring credit unions, community banks, will not have the deprivation index profile that Boom has got. We're quite proud of that. We feel that we are meeting the objectives that we're set up to deliver. From that, you can also see that's the stack rank of credit scores. Now, credit scores, interestingly, are a movable feast at the moment. And when we talk to Experian and other organisations, they're telling us that the credit ratings are declining at a very alarming rate. And as such, as bizarre as it sounds, they're telling us that we should be taking their credit scores with a pinch of salt, because they're what is good one month is not good the next. But what you can see from this, and this is 2021's data, who we lent to, you can see from the scores, you know, we are heavily skewed towards those at the bottom end of the stack rank. which again, brilliant. So our products, we've got a number of products, so I'm going to just whiz through these very quickly. This is, I think, potentially one of the ones that would be of interest. So these loans are for people who approach us for larger loans, and for one reason or another, we have to decline the application, and we don't do that readily. You know, there is a proper, thorough process and interaction with the applicant before we get to that stage. But in certain circumstances, we can offer them what we're calling our pathway loan. So the pathway loan is a fixed amount of £500. That's the borrowing limit. And as you can see there, you can top up 3 times over the course of 18 months once you pay down to £200. Now, one of the advantages of this arrangement is it gives people a little bit of breathing space to think about some of, a fix, a more long-term fix to their problems. It's a starting point. And one of the things as they move from A to B is that they build up savings at the end of the pathway as part of the loan repayment. So in that example there, the member could have £180 in savings at the end of the pathway. Now, what we are looking to introduce is when the person gets to point B on the pathway, what can we do for them? Now, as I said, the interest rates are 42%, up to 42% APR. I didn't come into this, I didn't choose to take this role because I want to rip people off. That's absolutely fundamentally my view of the world. So we're looking to introduce a product that will enable people to borrow at a rate that cheats what they could get on the high street or from other lenders. So the £180 example there, we would be prepared to lend £180 or maybe a multiple of 2 of £180 at, say, 9%, because we've got savings there that cover either all of the loan or part of the loan. So it moves people through a pathway. It sets them on the road to getting straight. We also offer child benefit loans. These are repaid directly from child benefit, and they are from 20%. We do loans up to £10,000 in that category as well. That is proven to be one of the most popular products that we've got, and particularly during the pandemic. We also do key worker loans. And I appreciate all of these products are they're loans. You know, they're badged slightly differently. But our key workers would include any form of key worker, whether that's care workers, supermarket workers, taxi drivers. The definition of key worker for us is quite wide. And we also, on top of this, have a key worker plus loan, which attracts lower interest rates than that 1956 shown there if they repay via a payroll scheme, because that reflects the de-risking of the loan. So we're happy to pass that through. And again, that would be a way of cheating the underlying risk of the individual. Lifestyle loans. So this is a relatively new one for us. This is quite a difficult marketplace. It's quite crowded, but we're conscious that when the times are good, the bank will lend you, the high street bank will lend you money, and when things are not very good, as my dad used to say to me, they'll take the umbrella away. We will step into that place, and we can offer largely debt consolidation loans for people who have historically managed to secure finance from the high street. The Engage card is the final element that I want to talk about. So this is this basically helps those that are struggling to to get access to any kind of banking product. There are some costs associated with it each month, but they can be recouped, as you'll see in future slides, through the cashback rewards. So we've got two options. We've got and we work in partnership with Engage on this. So we've got what they call the Engage Classic card. You become a member of Boom, which you can do for £5. No fees for joining, and then it gives you access to a sort of prepaid top-up card with a standing order facility on it, and we will advise, for example, the 75p you see there for the ATM withdrawals. We will encourage people to use cashback in shops to avoid. So we kind of help people through the best way of using the card. Then we've got the Engage current account. One of the things I should say about the Engage Classic is it can receive universal credit payments. That's useful. The Engage current account, where you can set up direct debit facilities and all the functionalities that you can see there. And they're some of the retailers that currently are on the Engage scheme. We're in discussions at the moment with Engage about introducing some more local retailers onto the card, which would be both good for the Worthing economy in particular, but hopefully good for those that are using the card. So are we achieving our objectives? I think we are, but I'm pretty impatient, as Tina knows, because I've had several meetings with her, and I have got a large amount of lending capital, and I need to get the message out to the wider community, because we are not very well known, that we can help, we will help where we can. And I've got about £1.5 million that I can lend, and I want to lend it, because now if you can't lend it now and help people, then we probably ought to just shut our doors. That's it, Sarah, that's me. If there's any questions.
That's brilliant. Thank you, Mark. Absolutely brilliant to find out about what you do. Really great resource to have here in our community. I'll pop your email address and website address in the information below so people can get in touch with you. Thank you so much again.